At Eastspring Investments, we think volatility has indeed made a comeback. There are a number of drivers behind this, whether it be geopolitical concerns, trade war fears, worries about inflation or a stronger US dollar. There are a number of things going on in the market that are driving volatility, and we think that's here to stay. We're recommending to clients to take a look at a low volatility equity strategy. Low volatility equity strategies are designed to participate in the upside in equity markets, but to experience fewer drawdowns over time. And by experiencing fewer drawdowns over time, this will compound and lead to higher total returns in the long term. We're finding good ideas across the board, but at the moment we're looking at countries like Singapore, Hong Kong, Malaysia, and Thailand. These tend to be the more stable markets in Asia that tend to be less volatile, so our portfolio is overweight in those markets. And at the sector level, we're overweight sectors like industrials, which are actually more cyclical in nature, but also traditionally defensive areas like telecoms, like utilities, but also names in the tech space as well do feature in our portfolio because we want to have a diversified approach. We want to have exposure to all the countries and all the sectors within the region. We have a blended approach to volatility, so some of the stocks in the portfolio may be higher volatility than the market and some are lower volatility, but at the overall portfolio level, we have about 20 to 30% lower volatility than the market, and that's the aim of this fund. Investors tend to equate low volatility investing with low returns, but in fact that's a fallacy and it's a market anomaly that can be exploited. In fact, low volatility strategies can and have outperformed the market. We've seen in very racy markets and go-go growth markets like we had last year, our low volatility Asia fund returned about 23%, which is typically not the environment that you would expect low volatility to do well, but the fund produced a double-digit return. But then in markets like today, when volatility has made a comeback, yes, indeed, we would expect low volatility strategies to outperform. We think it's suitable for all types of investors. We've done a lot of work around low volatility investing and found that it's quite complementary to traditional equity and fixed income investments. So for clients that have a balanced portfolio of equity and fixed income, if you just add in Asia low vol equities, for example, you can dramatically improve your risk return profile. So we think clients that want to have a smoother ride, that want to stay invested in the markets, that may be concerned about markets up and downs, would be well served by keeping their money in a low volatility strategy that will enable them to participate in equity upside returns, but also sleep at night knowing that they'll have fewer drawdowns in the portfolio. So dividend yield is a very important component of our investment process. We look to manufacture an underlying dividend yield that supports the distribution. We look for stocks that have an above market dividend yield at the country level. So the stock has on average a higher dividend yield than its market. And we blend this together into the portfolio to achieve a 4% historical distribution.